Thank you so much for joining us today. My name is Sokha Yous, and I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. So thanks for being here with us in person and online. So at any time, if you have any questions, please feel free to raise your hands or interrupt me. Or if you're online, just put in your questions in the chat. Well, I'll be more than happy to address it. But if you're a little too shy, you're more than welcome to go ahead and email me or give me a call. Personally, this is my contact information. If you can't write this down right now, it'll be at the end of the presentation as well, or you can always go to our website at mayocreditunion.org, go to the financial education tab of it, and my contact information will be on there as well. Okay, so today we're going to chat about building strong money habits. Okay, so let me know when you guys are ready. It's kind of a long one. The email address is long, I get it. Okay, so building strong money habits. The agenda for today, how to save more for the future with simple changes. In the current economy that we're in, we're always looking for different ways to save money, different ways to make money, and different ways in how we can have better habits with our finances, so that way we can make our dollars stretch a little bit more. So on today's agenda, we'll talk about why your money habits matter and areas to work on. We'll take a look at your financial picture, audit your current financial habits. We'll talk about how to analyze your spending patterns, evaluate your debts and where to go from there, which debt to pay off first, and how to go about doing that. We'll go ahead and quickly chat about recognizing good versus bad bad habits, mindsets and how you can shift them, and actions to take to build better financial habits. So an overview, understanding what your money habits are and why they matter can help you shift your mindset. So what is a money habit, right? Just like any other habits, just like exercise habits, eating habits, financial habits is one of them that we can always improve to. So money habits refer to the recurring patterns in how individuals manage, spend, save, and invest their money. These habits are influenced by personal values, beliefs, and attitude towards money, and shaping financial decisions and overall financial well-being. You'd be surprised how often when I meet with people about getting out of debt and stuff, how a lot of times it's usually just their habits that get into the situation that they're in, whether they're good habits or bad habits, right? So we can always work on improving that. So why money habits matter? They affect your financial stability, mental well-being, and overall quality of life. So good financial habits lay the groundwork for financial stability. Whether you learned those when you were a child, witnessing your parents or grandparents go through financial hardship, or not experience any financial hardship, those are the kind of habits that starts when you were younger. So if you find yourself in your situation now and tell your kids, we can't afford this right now, and kind of leave it at that, that's the kind of financial habit that you're forming in their heads right now when they're this young. So instead, we can work on saying different things. Instead of I can't afford this or we can't afford this, just saying, what, it's not in the budget, let's take a look at it and see what it looks like for the next payday, things like that. So those are the start of your financial habit, when you were witnessing how your parents got through their financial hardship, and what kind of exposure you had to personal finance growing up. And so by establishing smart money habits, you can better manage your income, expenses, and help you reach your financial goals. So a lot of times when I meet with people to work on trying to figure out how to save more money, where all their money is going to, or how to get out of debt, we really have to establish, how did you get there in the first place? How did you accrue or accumulate this much debt in the first place? Did you realize you were doing this? Were you spending because of some emotional situation that you were going through? What got you into the situation you're in? A lot of times people don't recognize that they do have bad habits with their finances until they're clearly in debt, until they need help, until they come to a financial wellness counselor, or until they meet with an attorney for bankruptcy. That's when they realize that they have some bad financial habits. But a lot of times no one really teaches about our personal relationship with finances and our habits and how they affect everything. Just like bad eating habits lead us to our health being a little bit worse, or our fitness habits, just things like that can lead us. Sometimes we just do it without thinking about it. So budgeting helps prevent overspending and debt accumulation. So I meet with a lot of people that need help budgeting their stuff. Not necessarily that they're bad at it. Sometimes you just not in the habit of writing things down, not in the habit of trying to allocate a certain amount of money towards debt or towards savings. So when I meet with people with budgeting, it really helps to kind of allocate allocate how much goes into different categories in life. One of the things that I like people to budget for is building emergency funds, because that provides your financial safety. So once you have enough emergency funds, emergency savings, different savings for different categories in life, it really avoids certain debt pitfalls. So just for an example, I'd like to have people save for car maintenance, in case you need some new tires, in case an emergency happens with your vehicle. You can always refer back to that emergency savings for your vehicle versus putting on a credit card and put you further into debt. Some of the habits I like people to build is really know where your money is going. It helps you stay on track and reduce financial worry. Some people come to me and they say, I make $100,000 a year before taxes. I don't know how much is after taxes. I don't know where my money goes to, but I know I just buy things and I have no idea where the rest of my money is going to, and I don't have any in savings. What can we do to get on track? Or what is on track looking like for you financially? So as part of budgeting is we look at where how much is being deposited into your account and where the rest of your money is going to. That includes you auditing your own accounts too, or you can audit the accounts with me altogether. So that is part of good financial habit, is really knowing where your money is going to. But for some people, it causes looking at your bank statements or credit card statement causes a lot of emotional stress, a lot of anxiety too. So maybe exposing yourself to, to looking at your bank statements more often, to looking at your credit card statements more often can help alleviate that anxiety also. But if you find yourself in this kind of situation where you really get really anxious looking at stuff, so you just avoid looking at your debt and looking at your bills altogether, perhaps it's time to get an accountable partner, accountability partner, or meet with a financial wellness counselor like myself, or consumer credit counseling, to see what you can do to get back on track, to see how you can deal with that anxiety, or perhaps meeting with a therapist to see how you can work about different coping mechanisms with your anxiety, with your fear. Why is it causing you fear to open up your bills and stuff? And healthy financial habits or financial behavior can create opportunities for the future, especially when you start saving. When you start establishing savings goals, it gives you, just hope for the future. In about 6 months, I want to go ahead and take my family to Europe. Should I start saving now? How much do I need to save now between now and December when our trip is, when do I need to buy the plane tickets? When do I need to book an Airbnb? What kind of activities will we do? When you set those financial goals, it gives you hopes and it gives you something to work towards. And it also allocates the money that you have extra in your account to go towards those certain financial goals too. So it's always good to always have financial goals when we talk about healthy financial habits. Just a fun little fact here, 1 out of 5 households in the U.S. spends more than they earn. So that's quite a bit. So it's not that they are overspenders. It's not that they are, just frivolously just spending on things. A lot of times it's more about tracking. A lot of times it's more about priorities. We need to save. If you put your savings account as part of one of your bills, and that makes it mandatory for you to start saving, especially when you have different financial goals that you want to save for. So treat your savings account as one of your bills. Pay yourself first. You always hear that, pay yourself first, but how do you actually do that? You can automate, savings, transfer directly from your savings account to your checking account, or you can go to your payroll and have it directly take a certain amount or take a percentage of your income, of your paycheck, and put it directly into a different savings account altogether. So understand your financial future. What does that look like? So you want to create a budget, and you want to track your expenses. Much easier said than done, right? Because tracking is so tedious. A lot of times people just do it for a couple days or even a couple weeks if they really stick to it, and then they kind of forget about it because it's a lot to keep track of your everyday spending and then different things that are an automatic deduction and stuff. But it's really important that you do create a budget. It's really important that you do track your expenses. There's lots of really good apps, lots of really good templates that you can use out there. And it helps you to better understand where you can improve with your habits as well. So once you kind of take a look at your, spending habits before, so go back, audit some of your accounts for the last 1 to 2 months and see where you're spending most of your things. Am I spending too much on food? Am I spending too much on eating out or groceries? Do I need to cut back on groceries because it's not like I'm cooking it all and, food goes bad? Do you need to, cut back more on your personal care. Maybe you don't need to get your nails and hair done every 4 weeks. Maybe stretch it out to 6 weeks or even 8 weeks or something. But it helps you kind of take a look and see where you're spending most of your money at, or, where you want to cut back, so that way you can help reach your financial goals. So looking at where your money is going to, can you see the pattern where things are going? Are you spending a little too much in one category, and you're supposed to be moving it more towards savings? You want to make informed decisions. Knowing your budget will help you plan for the future financial choices. Again, when it comes to budgeting, it doesn't have to be a restriction. Just kind of looking at more like a freedom. You know where every dollar is coming in. You know where every dollar is going to, and some of those dollars should be allocated towards that, and then also towards financial goals as well. So that way, it gives you the freedom and something to look forward to in the future. Do we have any questions so far or in the chat? No? Okay, great. So you want to identify areas of improvements, what's essential for you and what's not, Do you still have your subscriptions to Hulu Sports, even though you're not really watching it right now, and that's costing you $80 extra per month? Or do we need to go ahead and cut that out until football season comes back on? What is essential right now for you? Do you need to spend a little bit more towards a savings for your card maintenance, or do you need to invest a little bit more towards your paying off your credit card debt? So accountability, the discipline required for updating your budget each month will help you think twice about purchases. So, if you have some large purchases that you want to make, especially if it's something like, a large pool that's coming up for the summer, it's something for you to kind of set to aside for now, and just really think about, is it really in the budget? Do I need to save a little bit extra on my next paycheck to make sure that I, hit this financial goal? So accountability is really important, that you recognize what is it that you're spending your money on. Take accountability for your actions, and if it's something that it's not in alignment with your goals, then we can work towards changing that habit too. So this is kind of a demo of a budget that we have here with the credit union, but you can get templates anywhere online for free, or some that you have to pay. But there are really good budget apps out there too. But an effective budget starts with knowing where your net income, so your income that's in the green area, and categorize spending into fixed spending, variable spendings, and savings bucket. So for example, in this situation, I like to have the paydays, know when your paydays are, right? So list your paydays and some of the important dates, if you have some big dates coming up, like your birthdays and stuff, and trips, and there are some bills that are only coming out every 6 months, like your car insurance. Are you paying it every 6 months, or you're paying it per monthly? But if you're one of those people that pay it every 6 months, you can just put the important dates and the amount and stuff. So in the green section, it's going to be the income section. Know exactly how much is coming into your household. It could be for you, your partner, an extra job, however, whatever streams of income you have coming in, make sure you list it on there. Know how much is coming in each month. As you can see, this couple this is not real people, it's just something that I made up. It's just, and it's the amount and the prices that people are paying for are adequate, or it's in the amounts. It's the same as Olmsted County, what people are usually paying, the average that people are paying in Olmsted County here in Minnesota. So for example, Jane and Joe, they work at, Jane was a nurse at the Mayo Clinic, and Joe works in the city of Rochester. So per month, they clear $5,600. That's after all the deductions and taxes and everything. This is exactly the amount that is deposited to their checking account. This is everything after taxes and deductions. And then do you list your fixed expenses? Fixed expenses are things like, that comes out every month, pretty much the same amount of each month. So like your mortgage, it's going to be about $1,400 each month. Your water, trash, student loans, things like that. Cell phone is going to be about the same. Your car insurance be about the same each month. And then you list your variable expenses, variable expenses and life expenses. That's where you make or break your budget, right? Because the fixed expenses is going to be the same amount each month, so you know what to expect. But the variable expenses, like the groceries and the going out to eat, different events and hobbies and stuff, with different seasons. If you have kids, you have to adjust the spending according to the seasons that you have going on. They may have baseball, they may have track coming up or hockey coming up too. That might be more expensive. So, but always kind of keep it moving a little bit because it's variable expenses. But we still want to set a certain number for us to aim not to go over, right? Because we want to go ahead and put in our budget. Like, I wanted to make a goal not to go over $400 a month, or excuse me, $800 a month for groceries, or $400 every 2 weeks for groceries. You know, if your groceries a little high, but you know it's going to be the season where you travel a lot for baseball or for basketball, maybe your eating out budget's going to be a little bit higher and your grocery bill is going to be a little bit lower too. So whatever category you're adding a little bit more on, take it away from another category that you can, just to make sure that you kind of balance things out too. And of course, as mentioned earlier, I kind of want you to make your savings account mandatory, kind of like another bill too. As you can see in the blue section for savings and sinking funds, that's a savings category. So again, list it like any of your other bills, so that way you can transfer the money or have it on auto deduction or automatic transfer to go to a separate savings account. So that way you won't be tempted to touch it. So this is called a zero-based budget, where the entire it looks like at the very end of the month they don't have anything left over, but it's but again, all the categories in life, you have allocated funds for that. You have allocated funds for the savings, different categories for savings, for emergency savings, tires, trips, Christmas, things like that. And Christmas is only just a few months away, so I think it's a good time to start saving for Christmas now, or Halloween too. So, but it's really important that you start saving you start treating your savings account like another bill, like a mandatory bill. So for some people, I even move it up to their fixed expenses, so that way they know it's mandatory for them to start saving for that. And I think it's a good idea also to know how much is in your checking account, different accounts that you may have and stuff. Your 403b, 401k, your Roth, you can just put on there, so that way you know how much asset you have or how much cash you have available. And then when it comes to financial goals, I like to have like the category. So as you can see towards the bottom, sinking funds and categories. Back to school, we want to have a start date, we want to have an end date. We want to know how much is going to be going towards those financial goals. That category per paycheck or per month. Since these people get paid every 2 weeks, I like to have them, pay towards that savings category from each paycheck. That way it won't be too much from one paycheck. So it's really important that you figure out what you want for the rest of the year, how much it's going to cost you, and how many paydays you have left, and then divide that total balance over, or total amount over, divide it by how many paychecks you have left for the year, and then that way you can start saving from each paycheck. Again, if you have questions about the template, or I do have a template book or a budget book that I can send you, or it's actually on our website too. You can download and you can, just budget per paycheck too. So budgeting tips, how to get started with your budget. Again, use a spreadsheet or an app to create your budget. You can work with me or other financial wellness counselor. I know with Headspace, they have some available there, and they have some available with employee assistance program too with the Mayo Clinic. You can make tweaks as needed. So just because it's a budget, that doesn't mean we're going to be super strict about it. Again, there's going to be different seasons in life and seasons in the year that you need to adjust your budget a little bit differently. When the winter comes, when October comes, they start selling the coats and the winter stuff. You might be spending a little bit more towards the fourth quarter of this year towards winter stuff, new winter stuff, maybe new winter tires and stuff. Before buying anything, you should really ask yourself, will this add value to my life? We just kind of slow down and ask yourself these questions instead of making, impulse buying. Will this add value to my life? Am I buying this for the right reasons? Do I really need this new bag now, this new purse now, when I have 6 others that I'm not really using, but this is really cute, it's on sale? Is it really adding value to my life though? Is this really in my budget? Do I need to create a budget? Can I pay for it full now? If I can't pay for it full now, do I need to go ahead and save it? for the next 3-4 months, and then when I'm able to pay it in full, I can go ahead and buy that bag or that item at that time. Is this the best place and price to buy? Do I need to go online to check it out? Can I wait until Black Friday? There's Prime deals going on right now. Can I just wait until my next paycheck, or what is is this the best place to really buy this item at this time? Is now the right time to buy? You want to apply the 48-hour rule. Do I want to go ahead and just make this impulse buying now, or can I just go ahead and give myself a 48-hour rule, and say, you know what, if I really still feel this way in 48 hours, maybe I should just go back and buy that item, or take your time to do your research and see if there's some cheaper places or cheaper items similar to that. And most importantly, you want to save consistently, not just in savings and things you buy, but also saving from your paycheck too. So that's really important. Always save, because the more money you have available in your savings account, the less debt that you're going to accumulate, because you won't really need to use your credit cards or try to get a loan to pay for those items. Simple ways to save consistently. You want to pay yourself first, as always. Pay yourself first. Make it mandatory. So instead of just transferring it manually from your checking account to a savings account, again, you can always go to your payroll and you can have them deposit different amounts in different accounts. You can have it set up as a percentage. You can have it set up as a set amount. Instead of 3%, you can have them, move $500 towards the different savings account that's outside of your regular checking account. So that way you're not tempted to use that savings. Add yourself on a list of bills with the due date and the amount, whether it's per pay period or per month. I like to have people split it per pay period because it's a smaller amount. So if you want to save $600 a month instead of a $600 lump sum, you're going to do $300 every 2 weeks or whenever your pay period is. So that's a little bit more manageable too. You want to start with a specific savings goal, the specific goal that you want, the specific date that you want it by, and that way it helps determine how much you need to save per paycheck. You want to automate your savings through payroll deductions, and there are services that we have available to help save money, and we have automatic transfers here. We have CDs that are available with really good rates and competitive rates right now. We have IRAs available here at MEFCU, and Roth IRAs, and also money market accounts that give you, a higher yield savings, a higher yield interest rates to help you save more money too. You want to keep savings accounts separate from your regular checking account, whether that's with the same bank or separate bank. But at least then if you keep it with the same, with us here at the credit union, just have it, separately with your savings account and then a separate checking account, or you can have sub-savings account as well. So that way you can categorize the different savings goals that you have. You want to look for savings options that pay at a higher rate too. So if we are, while you're doing your research and you find that we are not, our savings rate isn't where you want it to be, and you find someone better, then we want you to, to take advantage of that, because right now, the higher the interest rate on a savings account, the more money that you're going to make in the long run. So it's really important that you do what you feel is best for you and your family and your financial goals. You want to audit your current habits. You can't change your habits. You don't recognize what areas that need improvement. So you want to collect your bank statements, your credit card statements, loan statements, bills, and pay stubs, receipts, tax return, anything like that, just to see how much am I paying, for the last 6 months. Why am I paying this much towards this category? Is this really, aligning with my future goals? If I want to save $20,000 by in 2 years for a down payment on a house, is buying an extra bag, or going out to baseball games every week, is that going to help you save money? Is that going to help you towards this financial goal that you have here? So it's really important for you to collect those statements, go over them, and kind of audit your behavior. So it's not just auditing your account, it's just auditing your behavior. What can I do to improve? Well, how can I change my habits? So one of the habits that I like people, when I work with people, I want them to take a look at their own statements. I know it may be scary sometimes, but take a look at it, Spending review, examine the above items and categorize your expenses. Did you know you need to put did you have to make an extra category for your pets too? Is that going to be extra? Do they have shots coming up every year or every 6 months? What do you have coming up for the pets? What do you have coming up for kids' hobbies and stuff? You want to analyze, so some of the expense categories that we have are housing, transportation, groceries, and entertainment. But as you can see with the template before, there are different categories as well. So, but when you review your spending, you'll realize how many categories you need for yourself, for your household, and how to, what kind of categories you need to put down in order for you to reach your financial goals. You want to analyze your spending patterns, look for non-essential purchases, impulse buying, and recurrent subscriptions. You'd be surprised how many people, didn't realize they're still subscribed to Hulu. They're still subscribed to, that makeup company that they, signed up for a free bag one time. They're still paying for it for 6 months later. So it's really important that when you do review your statements, are those recurring ones? Do you want to keep that, or do you want to go and cancel that for now? And of course, we want you to evaluate your debts, right? How did you get there? It's $10,000 in American Express. What were they spent on? Were they like travels? Were they just little things that added up in, over the last 6 months or a year? How did it get there? Why wasn't it paid in full? We need to analyze that and see what we can do so we can avoid that kind of, getting back into that kind of debt again. Does your perceived spending match your reality? Are you spending a little too much? If you if you think that have extra money just because you have available credit on your credit card, then you're just spending it on your credit card and not really realizing your actual income that's coming in. Is it something that you're able to pay off on your next paycheck? Is it matching the amount that you're actually bringing in? You want to prioritize paying down high interest debt first, especially in the economy we're in right now. Everything is so expensive. When you have a high interest debt, it's really, really hard to get out of these high interest credit card debts without actually taking out a loan or refinancing something to pay off that debt pretty quickly. So the goal here is, if you find yourself in a situation where you have interest rates, if you have high interest credit cards or high interest loans, we want to go ahead and work on paying those off first. We want to create a strategic debt repayment plan, explore different options with debt consolidation or refinancing, whether it's refinancing your vehicle loan to get that extra cash out to pay off debt, or your home, refinancing your home loan too. So something to always think about. The last thing we want you to do is have high interest debt. That's the one thing that when we start working together, we want to address that first. We first want to address the emergency savings, and then the high interest debt. That'll be number 2. So some good money habits, right? So prioritizing savings. Treat savings like a non-negotiable bill. A good rule of thumb is to save at least 10% of your take-home pay. If 10% is too much, let's start out with 1% and see where it goes. And then the next, couple months, you get used to not seeing that extra 1% in your paycheck because you have it automatically deposited into a savings account. Let's just move it up to 2.5% next month. The month after, we'll increase it by another 0.5% or something, just so you start getting into the habit of savings and get into the habit of living with a little bit less money being deposited into your checking account, because the rest of it is being deposited into your savings account. Make it automatic in your checking account. That way you eliminate yourself. Sometimes, you yourself are your own worst enemy, as people say. So if you don't even have to manually move it yourself, then you're not tempting yourself to, talk yourself out of savings. So it's really important that you take advantage of the automatic transfers from your checking account to a savings account. Create and stick into a budget. As we mentioned, we want you to build emergency savings. That's really, really important to avoid getting further into debt. Invest early and consistently. It doesn't have to be a lot. The sooner you invest, the more money you have later. A couple of you were here for, Dawn's presentation prior to this one, and talked about investments and stuff. The sooner you invest, the more you'll have later on too. Paying off debt, especially the high interest rate debt, living below your means, of course, it's really important. I know in this economy it's very hard for certain income tax brackets to live below their means, but we still want to prioritize that. You want to spend less than you earn to avoid debt and build savings. Be mindful of spending. It's very difficult sometimes, be mindful of spending and changing habits and stuff, because a lot of times we're operating on just co-piloting, just when we drive to work and stuff, sometimes we're kind of zoned out. Sometimes we just kind of happen to stop at Caribou Coffee or Starbucks because it's part of our habits, even though, when you start auditing your accounts, you'll see how often you're going to those places, and then it'll kind of trigger in your mind, you know what, I'm not supposed to be here. I'm not supposed to be at Caribou Coffee right now. So let me go ahead and drive away. So it kind of, put a little alert, put a little flag up for you to kind of drive away. Tracking your expenses, again, it's not fun, it's not sexy, it's tedious work, but it's really important for you to know where all your money is going to. It's really important for you to change your habits when you start tracking your expenses. What are some bad money habits? There are habits that you want to change and improve your financial picture. Spending more than you earn, it leads to debt and financial stress. Oh my goodness, I didn't realize it was gonna, I mismanaged my money with this paycheck. Who can I get the money from? Can I call my mom? Can I call my dad for for a loan? And then you have to pay them back on your next paycheck. So it causes that extra stress. Ignoring savings and delaying savings and delaying investing can leave you vulnerable to unexpected expenses and limits your potential for wealth building, not just for yourself, but for your kids and your grandkids too. So it's really important that you start investing early and start savings, making savings a good habit. Failing to budget. Without a budget, you may struggle to manage expenses and reach financial goals. Can't stress that enough, how important budgeting is when it comes to financial goals and making that a good money habit for you. Overusing credit cards or carrying a balance. With that finance charges, you have the late charges if you're not paying it on time. The interest rates and stuff. It's not, you don't want to just give your money to big banks when you can just pay off your entire balance and save that extra money. Impulse spending, is that something that you really need to work on? Is it just impulse spending? Is it impulse binge eating, or what kind of impulse issues that you have going on that maybe you need to address it with a different kind of therapist, to work on your impulsivity issues. Neglecting emergency savings, paying for unused subscriptions, we talked about that too. Avoid tackling debt, that can be detrimental. What if you need to use your credit to get more student loans for your kids and stuff, and your credit's not good enough, and now your kids got to take out a bunch of other loans, setting themselves up for a huge loan bill when they get into the working force or the working field. You use your credit for everything, so maybe tackling debt might be number one for some people on the list of priority, or it might be number 6 on the list of priorities. But again, avoiding tackling debt is a bad habit at this time. Now and altogether. Not checking your account balances, relying on cash advances, payday loans, etc., things like that. Those interest rates are really high. Places like Klarna, Afterpay that you see that are readily available on like Amazon or, different sites and stuff. Those are really hooking people into it because you don't realize, what, I don't have to pay $100 on this item right now. All I have to do is pay $25 for the next 4 payments. And next thing you know, you have 5 items like that. You have one that's due on the 5th, one that's due on the 9th, and you have another one that's due on the 14th. So you start losing track of all that. So all those cash advances, payday loans, and afterpays, things like that, they really add up. So just be mindful of that. Mindset and identity shifts. You'll want to adopt an identity-based habits. Like, I am a saver, I'm an investor, instead of I try to save, right? So it's just all about how we talk to ourselves. Abundance mindset, the things, when you believe that there are ample opportunities to earn wealth, and someone with this kind of mindset tends to be more generous with money, more open to calculated risks. Scarcity mindset of things like when you believe money is limited and hard to obtain. I'm in debt, I'm always going to be in debt. Those are limited mindset, scarcity mindset. I'm a saver, and this is just my personality. I'm going to be a saver, and that item is tempting, but no thank you. It's not for me. It's interesting, but I'm not interested in buying it right now because I'm interested in reaching my financial goals. It's just how you want to reword things for yourself. Scarcity mindset leads to hoarding and, avoiding financial risks, like good risks as far as investments go. So just the way you talk to yourself, the way you want to shift your identity. So we all kind of, hear some of the basics. If I say that, I'm working on good eating habits, I say, I'm healthier, I'm a healthy eater, I'm a runner, and it's something that I'm trying to shift my mindset to, even though I'm not really those things yet, but it's something we can all work on. What is your current mindset? Reflect on your upbringing. Again, financial habit starts early from your childhood. Are you making the same mistakes your parents made growing up? Did you sit around the dinner table and talk about, how much your parents are investing, how much is going to be available for your college funds? Or did you just sit around the dinner table and you hear your parents fight about finances? Are you doing the same thing right now? Because again, financial habits, your relationship with money starts from your childhood. And evaluate your emotions around money. Does it kind of give you a high to buy new items? You know, does it give you anxiety to open up your bank statements, things like that? Just examine your emotions around that. Example, do you spend impulsively and avoid talking about finances? That's one of the examples about, you know, your reflect on the way you were brought up when it comes to finances. Invest in financial education, things like this. It's free. With the credit union, it's absolutely free. There's a lot of information out there on the internet about how to change your mindset, you know, shifts on how to educate yourself with when it comes to personal finances. Learning will build your confidence and empower you to manage your finances better. You know, talking more, just budgeting out loud is, you know, a trending topic online. You know, people are talking about how much they're budgeting. Maybe it might influence you to talk about your own debt too, so that way you can free yourself from the shackles and the shame behind having debt and stuff. Surround yourself with positive influences. Seek people with healthy relationship with money. Surround yourself with people who support your goals. You know what? You can choose an accountability partner. You can have a budget buddy. You can meet with me, you know, every paycheck and say, you know what, I want to save money for this, but I kind of want to spend money on this past week. How can I change that? Like, I was so close to buying, you know, to buying this item, and I didn't have a budget. I didn't have a budget buddy. I didn't have a new one to bounce this idea off on. Who can I talk to? You can talk to a financial wellness counselor about that. You can go online and join a support group for that too. If you have, you know, some bad spending habits, there's lots of support groups out there too online. But we also want you to celebrate financial wins, acknowledge and reward your progress, no matter how small. You know what? I didn't have anyone to talk to, but I didn't buy that purse. I wanted to wait to talk to someone. I want to wait to our next meeting because I want to talk about how I felt about that time. I really, really want it. I know I'm going to, you know, I'm able to pay it with the money that's in my account now, but I wouldn't have money to pay rents, you know, in a week or so. So I stopped myself. You know what? That's a win. I didn't go to Starbucks today. That's a win too. So celebrate your little financial wins, okay? Actions you can take now. You can automate your savings and bills. Pay yourself first by automating payroll, direct deposit into your savings account, or automate transfers from your checking account to a savings account. It doesn't have to be in the same bank or same credit union, but it's really important that you just kind of set that on automatically so that way you don't really have to think about it. Track daily spendings if you're able to. A quick account check each morning builds awareness. You know, if they say that if you do the hardest thing first in the morning, the rest of the day is going to be a lot easier. Some people go on a jog, you know, in the morning because it helps, you know, get their day going and to do the hardest thing in the morning so that way the rest of their day is a lot easier. If the hardest thing for you is to check your bank account, start that out. Do that first thing in the morning. The rest of the day is going to be a lot easier for you. So that way you can start building that good habit too. Again, set auto payments on all bills and set it up to pay more than just the minimum due or the full balance when it comes to credit cards or loans and stuff. Excuse me here. Actions you can take now. You can start small and work your way up from each pay period, excuse me. So if you want to, if your goal is to save, you know, $300 a month, you can actually just start out with $50 per paycheck. The next paycheck, you can increase it to $60 or $65. Just increase it little by little. So that way, at least you start, and at least then you won't feel like too much of a hit initially. Look for ways you can reduce your spending, cut down on the non-essential items. Review your services and negotiate for better rates. Your insurance, you know, your insurance, your cable company, your phone company, your loans and stuff. So your car insurance, you know, of course they take a look at your driving history. That's the number one priority on their list and for them to determine your premium. But the number two is your credit score. If you got your car insurance a year or two ago and your credit score wasn't as good as it is today, you can give them a call and say, you know what, are you able to go ahead and lower this for me because my credit score is better? Are you able to run my credit report so you can see my score improved, and that's going to lower your premium a little bit too? Or what other discounts do you have available? You know, I got married, that could be part of, you know, a discount. Or can we add renter's insurance or homeowner's insurance on the insurance so that way you can have a multi-line discount? It's always good to just give them a call every 6 months or so just to see if they have some sort of deals and stuff going on. Same thing with cable, your phone. Loans, you know, if you got the loans when your credit score wasn't as good, but it's a lot better now. Are you able to refinance it so that way your interest rate would be lower? The lower your interest rate on the loans, the higher, or the lower your payments will be, and the higher, the more money you'll be able to save at the end of the month. Well, you want to remove shopping apps if that's one of your issues that you have. You know, remove shopping apps from your phone. Remove credit card information from your phone. You know, that one-click pay on Amazon might be a little dangerous at 2, 3 in the morning. You know, so remove that. Even if you just kind of remove those items, keep your debit card in your car or in a place where you know you have to get out of bed to get it. Even that extra step will stop you from overspending. Have weekly financial dates with yourself or an accountability partner. It can be your, you know, regular partner that you have now or a friend that you want to start budgeting together. But at least then you'll be more aware, you know, where your spending actions are at this past week and where you want to go this next week. Additional tools and supports that we have here. You can meet with me virtually or in person for ideas on how to better plan ahead for future expenses and set up detailed budget. A lot of times when I meet with people, it's not really for budgeting and for changing habits and stuff either. It's sometimes you can just use me as a sounding board. You know, am I on the right track? You know, on my financial goals. Am I on the right track? What can I do to get there? Am I behind, or what is considered behind in your situation? You know, use a tracking tool to manage expenses. You can do the template that I have. You can go to our website to download that. You can have different apps that you can use. Some are free and some are not free out there. So it's a lot of good resources out there too. Keep tabs on your expenses with services that we have available here at MEFQ. So online and mobile banking, e-statements, automatic savings transfers, and bill pay. So, and again, this is my contact information. So if you have any questions, comments, or concerns, you're more than welcome to reach out to me. My name is Sokha Yous, and my phone number, and that is my email address. But if you can't write this down now, again, you're more than welcome to reach out to, go to our website, mayocreditunion.org, and go to the financial education tab, and you'll see my contact information on there too. Okay? Thank you so much for joining me today. Do you guys have any questions here online? Okay, wonderful. Well, thank you so much. Have a wonderful day. Thank you.